At the beginning of the flourishing times of the economy, banks were considered an essential part of it. They're seen as a structure that is not only capable of managing money, but also can create one. That's why it's not a surprise that many people trust banks, especially in handling their money for them, because we have this impression that banks help us grow our money. However, this video is going to change that. We'll expose the top 5 money truths that many banks are keeping a secret. In this way, all of you will be aware and maybe even have the chance to grow your money in your own way without depositing it in the bank. So, without further ado, let's go to truth number 1. Keeping your money in a bank is fraudulent. How much interest would you receive if you deposited your savings in a bank? I'll ask you that. It appears at first glance that at least a small percentage is necessary for it to make any sense, correct? But if you examine the data, it's far from that. The best banks, like the Citibank, provide a paltry 0.5%. Even though interest rates are currently at their lowest level, some institutions offer more than 1% rates. Consider this: when inflation is 2.5%, your money grows by 0.5%. Your wealth's fundamental value is essentially declining yearly. Spending the money right now is preferable to keeping it in a bank. Your money's purchasing power in a few years will be significantly lower than it is today. And when inflation is as high as it is right now, for instance, the prices of assets like homes and stocks soar tremendously. As we have seen in the past year or two, a bank is not a place to make money. It's a place to park your money. Truth number 2. It is legal for any bank to print money out of thin air. You probably won't believe me if I tell you that banks produce money because the Fed is the only bank permitted to do so. It is the only organization with legal access to that printing press and the source of the dollar. The banking system is set up so that each bank in the nation, or in fact the entire world, is permitted to produce money to a certain extent based on the number of customers placed in that bank. Let's assume that you deposit $1,000 at Bank A. What do you suppose the bank will do with the money? The bank loans your money to someone else who wants to purchase a vehicle or a house, for example, and collects the interest that is frequently considerably more than the meager 0.5% it pays. If they kept it, they wouldn't even be able to pay you that wretched amount. The typical interest rate on credit cards is 20%. The difference between those two amounts and what the bank pays you is enormous. The critical thing to remember is that the bank won't disclose you to the one who will borrow your money. If your money is still in the bank, where did the bank get the money to lend to someone else? When you check your account, the bank will always show you that your money is still there, and you can withdraw it whenever you choose. Fractional reserve banking is what that is. Only 10% of the deposits may be kept by banks. The remainder must be lent. The bank makes another $900 and lends them to someone else for every $1,000 you deposit, bringing the total to $1,900. $900 appeared out of nowhere thanks to the bank. Since all that is on the computer is a series of numbers, it's not as challenging as you might imagine. Truth number 3. By taking out bank loans and investing elsewhere, you can make money. Mark Zuckerberg obtained a 30-year mortgage in July 2012 to pay for his $5.95 million Palo Alto residence, which is only 3 miles from Facebook's corporate offices. He was the 40th richest person in the world at 28, with an estimated net worth of $15.6 billion. Why would you go into debt if you had billions of cash and the means to pay it off quickly? He could pay cash for a dozen mansions valued at $6 million without batting an eye if he so desired. Why obtain a mortgage? It's free money. That's the response. I recognize that sounds absurd, but when you're already a billionaire, who would give you extra money? Unless it's for charity, why would somebody give someone else free money? Interest rates are a prominent theme throughout. Recall how we discussed how banks' returns are so low it's not worthwhile to leave your money there because it doesn't even beat inflation, meaning you're losing your money. In this case though, it's the opposite. Any money you borrow below the inflation rate is seen as free money because the inflation rate in the US is 2.5 to 3%. The mortgage rate for Zuckerberg was barely 1.05%. According to the calculations, the bank loses since the mortgage rate is less than the inflation rate. To perform the math, you don't need to be brilliant. Let's imagine you take out a $1 million loan at a rate of 1.05% as an example. Before the pandemic, the average rate of return on a savings account was 2.4%. It's currently less than 1%, but let's stick with 2.4%. This means that even if you deposit the $1 million in a different bank, you'll still make $24,000 a year even though the bank that lent you the money will only receive a monthly payment of $10,500 from 1.05%. Think about what would happen if you did that with $100 million or $1 billion. There's no benefit to keeping your money in reserve when you may spend it on more profitable endeavors. Of course, since the difference is so minor, this may not make sense when discussing smaller sums of money. However, betting about 1, 2, or 5% might potentially equate to hundreds of thousands of dollars when dealing with significant funds. Truth number 4. Remember that banks are businesses like any other, and their goal is to maximize profit. The richer you are, the lower the rate you receive. They're not responsible to their shareholders. They will not exist if their business model is not successful. Thus, they are far more at ease lending money to a rich person than to a poor person. For example, when you're a billionaire, the bank can rest easy because no one is concerned that you would fail on your loan. However, if something were to happen and you could not make your monthly payments, you could quickly sell a portion of your firm to cover your mortgage. In actuality, this is how the banking system developed over the centuries. Banks only did business with the nobility, the individuals who had wealth or assets that continuously generated revenue, like land. Contrast that with a typical employee who may become sick, unable to work, or lose his job. Lending money to someone who's barely getting by is quite dangerous. I know that it's simple to condemn banks for such, but consider it. If your friend hardly makes any money, or if your friend has a business, how would you feel comfortable lending them money? You would probably choose the latter, as harsh as it may sound. Therefore, improving your financial situation is a prerequisite if you want to receive a better deal on a mortgage, credit card, or merely better conditions when borrowing money. Banks also provide such a low mortgage rate to build trusting ties with wealthy people so that they will turn to them for a larger loan in the future. It benefits both parties. Blockchain and cryptocurrency technologies, for example, promise to change this and democratize banking. And they probably will to some extent. In fact, banking has become so democratic that everyone can use financial services. Compared to a century ago, that is amazing. Truth number 5. Credit cards are the nuclear weapons of banks. 70% of Americans with credit card debt admit that they won't be able to pay it off this year. Think for a second about what does that mean. The obligation on your credit cards is not the same as the mortgage. It doesn't grow at 3.5% annually. It's probably over 20%. What makes you think you can pay off your credit card debt in a few months when it has significantly increased if you can't pay it off now when it is due? In other words, 70% of Americans are on the verge of becoming debt slaves. 56% of respondents polled to claim to have had credit card debt for at least a year. And the majority will keep using it for years to come. Nearly 20% believe it will take them longer than 3 years to pay off their debt, while 8% are unsure they will be able to do so. And because most individuals choose to spend without considering how they will pay it back, that's how banks typically make their fortunes. They're prepared to maintain their current quality of living, even if they can't pay for it. Banks phone you repeatedly to try to sell you a brand new credit card because of this. Without a doubt, using credit cards responsibly helps raise your credit score. But if you're not financially responsible, you should really avoid falling into the debt trap. And there you have it, folks. I hope this video somehow enlightened you on how to take good care of your money. Thank you for watching, and don't forget to comment, like, and share this video. See you at the next one.